Well, in terms of low growth, I think that also means stable rents. So that's at least a predictable scenario. We don't expect the investment market next year to really boom or to do much different than this year. We've already seen a slowdown in the last couple of months because of the reluctance of international non-euro investors to come into the European market whatsoever. We've been talking to American, Swiss, and Asian investors in the last couple of weeks, and the appetite to allocate money into Europe currently is quite low. So the whole investment market will depend on euro investors for a very large proportion, unless the prices should shift dramatically and opportunistic investors should come into the market, which is not what we expect, because the pricing levels and the willingness of banks for large write-downs to fuel that markets is quite limited. So we expect a slow but constant activity in Germany, fueled by the attractive interest rate environment.
Low growth is a sign for stable markets. Low growth is a good sign for for lenders, but also for core investors. A low growth on the investment market is not for the opportunistic investors. This is the most important summary of all, I think it's for the environment where we are at the moment, with low interest and nearly low inflation. It's a combination for long-term investors.
I think we're also positive in terms of stability. I think we are seeing a little bit more that tenants are taking more time to make decisions and preferring to stay in their location, trying to renegotiate rent, rather than moving at this point in time, just because they're uncertain about their future outlook. We nevertheless think that Germany, also compared to other European countries, continues to be attractive because of the stability and the slight growth we may still be seeing in the next year, even if strongly subdued. So we would expect that, like already mentioned, investment levels probably remain quite stable, also because of a limited offer, limited supply, because there is little development activity. So all the core investors that are looking to put liquidity into Germany, which on a comparative basis is still performing reasonably well, don't have a lot of choice.
As a lawyer, there's a slightly different perspective on the market, and I think the low growth, I would phrase it slightly different. We are positively surprised because for a long time properties did not come to the market. Simple reason being that they were frozen in structures which we all had to decide on what to do. So as a lawyer, we see growth in the transaction opportunities that translates into either new acquisitions because properties are available there to be bought on a, let's say, repriced basis, or that product is available to be dealt with. Let's put it this way. If we go back to the question of what do we see at the, let's say, new business, yes, it's more stable, but the positive thing is that people are paying more attention to what I call the interface challenge. Remember back a little time, everybody can make its own decision how long that should be. We had the disconnect between the legals, the valuers, and the acquisition decision. This has changed today. We see a very integrated deal approach between the investment committee approvals, the bank lending decision approvals, and the due diligence. And I think this is a good sign for the product on the way forward.